Great. So, welcome everyone. Thank you for joining on Blockchain's meetup on AAVE. Just a quick couple notes before we dive in. Please keep your mic muted throughout the session. Alex has offered to take questions throughout her talk, but we would prefer, just given the size of this group, that everyone puts their questions in chat and then she can get to them as she feels comfortable. We will be recording the entire talk portion of this event. So if anyone wants to stay anonymous, that's totally fine. Just mute your video and just use your first name. And like I mentioned, Q&A we can do throughout the session or towards the end. So feel free to kind of put your comments, questions in the chat throughout the session. And yeah, I'm seeing some familiar faces, but some new faces. So welcome if you're not familiar with Women Blockchain. It's an initiative to increase diversity in the crypto space and break down barriers to entry. We do a lot of different initiatives. Some of them look like today's, which is focused on education. We've done a lot of workshops in the past. We also launched a beginner's guide to blockchain if you are new to the space, or if you have friends who are new to the space and don't know where to begin. That's a really good starting point. So definitely go check that out. We also recently launched a DAO. It's an investment DAO, basically investing in female founders in the crypto space. So we do a lot of different initiatives and are always excited to have new community members join us. If you're interested in being part of Women Blockchain, feel free to reach out to either me or Tessie throughout this presentation or even after this. But now, without further ado,
Wait,
today's
one quick
session.
announcement.
Yeah, go
Before
ahead.
that, sorry. Also for anybody in New York, we will have a in-person social next week, Wednesday the 18th. Check it out, it's already announced. And that would be great to see everybody. Not everybody from India, I guess that is difficult to get there, but yes, it's in person, it's in a park, so it's outside. And in September, we will have a session on female investors and funds and founders. And so stay tuned for that.
Yeah, we are starting to think about in-person events. So the New York one is kind of the first. Hopefully we'll be able to do more, but I think the idea is to do hybrid so that we get to meet the community across the country, across the world, and also do some in-person events to meet the community in person. So that's kind of the plan going forward. But like I mentioned, without further ado, I'm going to introduce our speaker today. Today, we are going to be going behind the scenes of AAVE, one of the largest DeFi players in the space. And we have Alex Bertoggi here, who's the risk manager at AAVE, who's going to take us through the demo, take us through the overview of AAVE, and then dive right into what are the risk frameworks that she's thinking about and the people at AAVE are thinking about. So welcome, Alex. Thank you so much for joining us. Super excited to learn from you today, and welcome to the community.
Hey everyone! Yeah, thanks for having me, Manasis. It's really nice to be here in a group of. It's rare to see such a female-dominated group in crypto, and it's a real pleasure. Let me share my screen. So basically, I'll go over a presentation, and then if we want to go over a bit more detail, we'll go directly into the docs. So I'm Alex. I'm the risk manager of the AAVE companies, and I've been working at AAVE for nearly 2 years now. And so my background is as risky as it gets because I'm an actuary by training. So I'm a specialist of risk quantification. And so when Stanley and Jordan hired me to work on AAVE 2 years ago, that was when we were just working on the version 1 of the white paper. And so it was really to build this risk framework and to start building general risk standards for DeFi, because at the time it was really the Wild West. And it's only now 2 years later that we're starting to see kind of some protocols that have really high risk standards emerge, and some people call them a bit more blue chip. And so during this presentation, I'll try to help you understand how we managed to do that and to make a secure protocol that's been holding liquidity, because I believe that's one of the secrets of AAVE success. Is that it's put so much, invested so much on security and risk management, and it's allowed it to grow organically to the levels it is at today. So you've probably all already heard about DeFi. Oh, sorry, I just gonna hide your faces up there because it's hiding my presentation. Perfect. Yeah, so everyone here probably already knows about DeFi, but just wanna go over some of the founding values of DeFi before we start getting into AAVE. So the idea of DeFi is that it's more peer-to-peer or peer-to-contract. So it's permissionless. Anyone can interact with the softwares that are online, and there is no intermediary. So the only intermediaries are other peers or smart contracts. It's open and transparent. So this means that every single transaction is recorded on the blockchain. And so that creates a fully auditable financial system. One of the great features that has been really leveraged this last few years is the composability of DeFi, and that's particularly the case within the Ethereum ecosystem. And this means that DeFi protocols can integrate each other's contracts and each other's financial solutions to build even more complex ones. And so because it's permissionless and available on public blockchains, it's censor resistant, because it can't really be banned, or the blockchain has been duplicated on satellites and hundreds of thousands of computers. And so it's a very resilient financial system. So there are different types of protocols. AAVE is a liquidity protocol, so that means that it holds a lot of liquidity that can be supplied and borrowed. There's also automated market makers like Uniswap, where you can exchange an asset for another asset. There's the insurance protocol Nexus Mutual, where you can insure the assets you've deposited on specific protocols. And so more and more different protocols are emerging. So on top of those three major ones, there's protocols like Paraswap, which are aggregators and which combine the different automated market makers to help you get the best price. Then there's also kind of smart asset management protocols like Enzyme Finance. Same thing, it kind of uses all the financial solutions built by different protocols to allow more complex asset management. Oh, I'm seeing there's quite a big glitch. It's very sunny in London, which is rare actually.
It's all good, looking good now.
Yeah. So AAVE is a liquidity protocol. So if you want to get involved in AAVE, the first step, to use the AAVE protocol, the first step would be to supply liquidity. And then once you supply liquidity, you can use that as a guarantee to borrow liquidity in exchange. And so at the moment, there is over $20 billion of liquidity on the protocol. So that's quite a large liquidity pool to allow even really big players to do operations and to do kind of sophisticated strategies. The idea when you borrow is that the guarantee is higher than what you're borrowing. So the credit risk is mitigated by those assets that you've already supplied into AAVE. And so the liquidity pools have kind of a life of their own. And so the utilization ratio, which is the ratio of borrowed assets over the total liquidity for each asset. The utilization ratio is one of the parameters that I follow closely, because it's important that there is always liquidity on the protocol for also so suppliers can withdraw the assets they've deposited on it. And so we'll go over this a bit later, but so one of the tools to manage this liquidity is the interest rate model, because when you borrow on AAVE, usually you're going to borrow with a variable rate, and so this variable rate evolves with the utilization, and so this can be used as an incentive to repay borrowing or to attract more depositors. Pamela, I can send out the slides after this. So as I was saying, there's at the moment just over 20 billion of liquidity. So these are some figures I've extracted from AAVE Weekly, which is a weekly newsletter that goes out every Monday, and that tracks the protocol metrics, the protocol liquidity, its usage, and also what's from a depositor perspective, how much interest have been generated by the protocol, which assets have the highest APYs and things like that. So at the moment, so in May, everyone who's in the crypto markets know there's been a big market consolidation. So before that, the AAVE protocol already had about 22 billion liquidity. It crashed to nearly half, and now 3 months later we're back at those levels. So it's quite a good figure to see again. This liquidity generates some income for suppliers and for different users of the AAVE protocol. So this is highlighted below the donut charts. So in total, last week, the AAVE protocol generated around 14 million. And so of those 14 million, there was 5.7 million that were paid out directly to depositors by the borrowers. Of this, AAVE V2 introduced a reserve factor where a share of the interests are directed to the ecosystem reserve. So it's kind of like a treasury. And so the idea is to make the DAO sustainable, because we're going to need to, we're going to need to fund ecosystem growth and ecosystem contributors like you, maybe, who knows, you could all become ecosystem contributors and get paid to work for AAVE if you wish to. Another good source of revenue has been the flash loans. So I'm sure some of you have heard about flash loans, but maybe not all of you. So I'll just explain a bit what this is, because this was kind of one of the first major innovation the AAVE protocol brought in the version 1. And so in a flash loan, users can basically borrow the available liquidity on the AAVE protocol, which at the moment is around $10 billion. You can borrow without a guarantee, without a collateral, but the only condition is that you have to repay within the same transaction or within the same block. So this means that you can basically, with $10 billion, it's possible to do kind of a series of transactions in the AAVE, in the Ethereum ecosystem, where you can arbitrage between protocols or between prices in decentralized exchanges, for example, make a profit, and then you just reimburse the flash loan and you keep basically the difference. So it's quite an interesting, financial product. And so the fees to these products, to these flash loans, the fees are kept, the 0.09% fees are kept for depositors. And it might be a small